This is Nightly Business Report with Tyler Matheson and Susie Gehring.
Record breakers. Apple sells more phones than ever in its debut weekend, and Alibaba is officially the world's largest IPO. What these two events mean for the market and investors.
If you build it, they may not come. What's behind the slump in existing home sales? And what does it say about the strength of the housing market?
Commodities crush from the oil patch to the metals pit. Why are commodity prices sinking? All that and more tonight on Nightly Business Report for Monday, September 22nd.
Good evening, everyone. Red arrows across the board for the major averages today. Not what you'd expect after two record-shattering events that would normally give Wall Street investors a big lift. In the first historic deal, Friday's initial public stock offering for Alibaba officially became the biggest IPO in history, raising a total of $25 billion for the Chinese e-commerce giant. Now, that's because initial demand for shares was so great, with the stock surging 38% in its debut. An additional 48 million options on shares were sold by underwriters, putting Alibaba into the history books. Now, the other record-breaking news came from Apple. It sold more than 10 million iPhone 6 and iPhone 6 Plus smartphones in just the first 3 days of sales, its biggest product launch ever. With demand for the phones exceeding expectations, how many more new smartphones can Apple sell? And is the bigger screen iPhone 6 the hit that Apple needed? Josh Lipton reports.
Apple's CEO Tim Cook says that the new iPhone 6 and iPhone 6 Plus represent the biggest advancement in the history of iPhone. A lot of consumers seem to share in that excitement. Apple says it sold 10 million iPhone 6 and iPhone 6 Plus phones through the first weekend of sales. That's a new record for the company, and even more impressive considering that the phone hasn't even gone on sale in China yet. Apple doesn't detail the sales figures between the iPhone 6 and 6 Plus, but analysts say both will see aggressive demand.
You're going to look at a mix between the 6 and the 6 Plus of 50-50. That has a huge impact on what the margins and the gross profit dollars are too. So the Apple's really turning all the right dials on this launch.
The strong launch wasn't too much of a surprise given how robust demand appears for the devices. Munster says lines in New York City and the Midwest were at least a third longer than last year. Apple fans, such as the team at RBC, expect the stock to move higher from here as the company keeps selling a lot of its flagship product.
Our take is they'll sell something close to 63 million iPhones in the December quarter. You should get something very close to 41 million units for September. So, between September and December, a little over 100 million iPhone units is what we expect Apple to ship.
There are also new products on the way, such as the Apple Watch, which could excite consumers. But even bulls like Daryanani acknowledge the risks for investors. After making a big move, the stock no longer looks as attractively valued, he says. With the stock up about 25% this year, the bulls do remain in charge, at least for now. Josh Lipton, Nightly Business Report, Silicon Valley.
Well, the Alibaba IPO was historic, the biggest on record, but it was so last week. And now investors focus on a pipeline of IPOs to come, including a handful this week. Bob Pisani has more on the next big IPOs for investors to consider.
Now that Alibaba is out of the way, global markets are gearing up for a raft of IPOs. There's a dozen expected in China this week and many in London as well. In fact, high-end shoemaker Jimmy Choo may go public in London in the next few weeks. In the U.S., there's 12 IPOs expected this week alone, seeking to raise almost $8 billion. That's a lot of money to raise 1 week after the biggest IPO in history. Alibaba raised over $20 billion. The test for the broad IPO market this week will be a big bank, Citizens Financial. At $3.3 billion, this is a big deal. In fact, it's the second biggest IPO of the year, just a few days after the biggest IPO ever. There are other large deals as well. Grupo Aval, the biggest bank in Colombia, is seeking to go public here on Wednesday, as well as Travelport Worldwide. That's a travel e-commerce company. There's also Smart and Final Store, a high-end food retailer. Now, one sector that hasn't been seen in months are tech IPOs. The last one was Mobileye. That's an Israeli firm that specializes in collision avoidance systems for autos. They debuted July 31st, priced at $25, and is up 91% since then. That's why everyone is going to be watching CyberArk this week. That's an Israeli cybersecurity company when it debuts this week. It's seeking to raise a small amount of money, about $70 million, but it's the first tech IPO in almost 2 months. Now, if these deals can price in their expected range, that will be a sign that Alibaba has not taken all the air out of the IPO market. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
As you reported earlier in the program, the major averages were all sharply lower today, just one day after the Dow reached an all-time closing high. Now, a lot of the blame is being directed at China after China's finance minister shot down any hope of new stimulus measures to give its economy a boost on concerns about slowing growth. On Wall Street today, the Dow fell 107 points, snapping a streak of 5 straight winning sessions. The Nasdaq had its worst session in nearly 2 months, falling 52 points. And the S&P lost 16 points, closing again below the key 2,000 level.
Mark Lucchini joins us now to talk more about the markets and what a record IPO and iPhone sales mean for equities. He's Chief Investment Strategist at Janney Montgomery Scott. Mark, welcome back to the program. Good to have you with us.
Thanks,
okay, so the market took a bit of a breather today, worst day in several weeks for a couple of the averages. But let's talk first about Alibaba. Do you look at the market reception to that as a positive? Does it help equities in the long or midterm?
Well, it doesn't hurt. I mean, there were some very unique features to Alibaba that I think doesn't speak necessarily broadly to the IPO market, given the fact that obviously it's in a space that is very interesting and exciting, e-commerce, obviously tapping a Chinese consumer base of 1.3 billion. In addition to that, it had a lot of fanfare associated with its sheer size. But that said, the fact that it not only was priced, but then appreciated significantly above its initial IPO price, I think is indicative of generally investor appetite for good quality companies and opportunities, and still an appetite for risk assets. So I would sort of broaden out beyond that to say, yes, it is a litmus test for the overall equity markets and market participants' interest in them. And I would say from that standpoint, it's a good sign.
And Mark, what about Apple selling 10 million of those iPhones over the weekend? To what extent does that also impact investor sentiment?
Well, certainly it's a positive for Apple. I don't know that I would necessarily stretch that to include any kind of indictment one way or another about market conditions, because I think that happens to be something a little bit more unique to Apple, and the fact that obviously its upgrade was very well received, probably because of the screen size, but as well as some other features associated with it. But nonetheless, it says that for the right company and the right product line, there's a consumer base out there that's still buying, which is, I think, a good testament to general economic conditions, if not so much the market.
The market's come a long way in this quarter. We're almost at the end of it. September has been reasonably good, I would say. But now there's going to be a sort of proof in the pudding. Earnings are going to come out, and we're going to have to answer the question, are stock prices justified by the earnings? What do you think?
Agreed, Tyler. I mean, we have, in our view, full valuations in the equity market, not egregiously priced, but certainly not cheap. And so that places a lot of demand on earnings and earnings growth. And we had a great second quarter earnings profile of about 8 or 9% year over year. Expectations are that we're going to see more of the same in the second half of this year. So that leaves room for disappointment clearly on that front. You know, that said, we haven't heard much in the way of any pre-announcements to suggest that we're going to see those kinds of disappointments coming through. But nonetheless, economic conditions have to be supportive of the kind of profit growth that ultimately supports current levels of equity prices, let alone the expectation that they go higher from here.
Mm-hmm. And despite all these positive cross currents that you've been talking about, what do you think happens over these next couple of months of this year? Will we see any kind of pullback, a correction? What's your outlook for the rest of the year?
Well, Susie, certainly we, like everybody, expect to see a correction. We have now seen the Dow Jones Industrial Average go the fourth longest period of time since it had a correction of 10% or more since 1929. So clearly we're due. That said, any kind of election cycle that you look at suggests that mid-year elections are typically very good for the equity markets. Over the last 60 years, post every mid-year election, we've had a rally in the year end that has taken the market up on average about 16%. So it says buy the mid-year elections. And so if we get any corrective phase in advance of it, use it opportunistically.
All right, Mark, thank you very much. Mark Lucchini,
Thanks,
Janney
Tyler.
Montgomery Scott.
Two huge mergers, both with German companies buying here in the U.S. German drug company Merck is paying $17 billion for Sigma Aldrich. This is the St. Louis-based chemical and lab equipment firm. Sigma's CEO said the deal was a very positive one for shareholders and for his more than 9,000 employees.
What this deal does, it puts two companies together who have a complementary product offering, a regional overlap, and therefore brings about something which is better for the customer, and brings additional value for the customer.
If you look at the benefits of a combination like this and how we can enhance the value proposition for the customers, and really that's the thesis, because if strategically you cannot enhance the value of the customers, you shouldn't do the deal.
Shares of Sigma surging today, closing 33% higher.
In the second deal, which was reported to be in the works on Friday, the German industrial giant Siemens will pay more than $7 billion cash for the Houston-based Dresser Rand. It's a maker of equipment used in oil drilling. Siemens is buying the company to beef up its position in the booming U.S. shale oil and natural gas industries. Shares of Dresser up more than 2.5% today.
And it looks like another big acquisition is in the works, but it's not a done deal just yet. EMC, which makes data storage devices for corporations, has reportedly been in talks with two rivals, Dell and Hewlett-Packard, about a possible merger. EMC is worth about $60 billion, so any deal would be the largest tech merger in history. Shares of EMC edged up just 0.5% today.
There's a big change coming to the Federal Reserve. Charles Plosser, who has been president of the Philly Fed since 2006, will step down in March of next year. Plosser is known as the central bank's leading inflation hawk. And true to his reputation in the past two Fed policy meetings, Plosser voted against keeping short-term interest rates at record low levels for much longer. He thinks easy money now risks higher prices later.
Meanwhile, the president of the New York Federal Reserve is hoping the U.S. economy starts getting hot. In an interview today, Bill Dudley said that he hopes to see full employment and a hot economy so inflation will rise and the central bank can begin to increase those interest rates next year.
The nation's mortgage industry could use a little heat right now. The Federal Reserve reported today that mortgage originations tumbled 11% last year after lending rates ticked a little bit higher and there was a sharp drop in loan refinancings.
More signs of the choppy recovery in housing today. Sales of existing homes took an unexpected turn for the worse in August, down nearly 2%, the first decline in 5 months. Realtors are blaming the drop on a sharp pullback by investors. But could that really be the only cause? Diana Olick has the story.
They came,
165.
they bought, they pushed prices higher, but now large-scale investors in single-family homes are cutting off the cash to the housing market.
I think the investors are concerned with potential rise in the interest rate.
Realtors blame a drop in investor purchases for the unexpected drop in August home sales, down nearly 2% from July and down over 5% from a year ago. But the drop in the share of investor purchases is far more steep. Just 12% of buyers in August, down from 28% 4 years ago. This does not, however, mean investors are necessarily selling.
In our rental business, we see much better results than we ever imagined.
Not when rents are skyrocketing thanks to surging demand from millennials.
They look at life differently. They live differently. Their investment expectations are dramatically different. And they're not looking at a house as being an investment vehicle anymore.
It's not that millennials don't aspire to home ownership someday. It's just that they're getting married and having children later in life, and those are the two biggest drivers of home ownership. They also have a lot more of these to choose from, single-family rentals, and they don't see the same stigma attached to renting that previous generations did.
I would expect that we're going to see higher levels of rentership for at least the next 5 or 6 years, after which I hope that those levels decrease and people learn to get into sustainable home ownership again.
The exodus of investors could mean less competition for younger buyers now, but it remains to be seen if more of those younger buyers will be willing to play. For Nightly Business Report, I'm Diana Olick in Washington.
Still ahead, it's not just oil that's sliding. Gold and silver also losing their shine. How low will commodity prices go? The Securities and Exchange Commission is paying its largest award ever to a whistleblower. The anonymous recipient who provided information that led directly to an enforcement in an undisclosed securities case will receive $30 million. That sum is double the previous record whistleblower payout and is the fourth award given to an informant living in a foreign country.
Finance ministers and central bankers from the world's 20 largest industrialized nations, this is the so-called G20, met in Australia this weekend, and the theme was how to grow their economies. Nearly 1,000 measures were proposed aimed at boosting global growth by 1.8% by the year 2018. That's a little bit lower than previous targets. A common concern, the weak economy across Europe and the negative impact that's having on other economies.
Well, something else weighing on the economy today, the falling prices of some top commodities, including oil, gold, and silver, which have been hit hard while equities have reached all-time highs and the U.S. dollar has gotten stronger. So just how low can these commodities go? Jackie DeAngelis takes a look.
Crude oil near $90 a barrel. Gold bouncing around $1,200 and silver just under $18, sitting at a four-year low. Why the commodities crush when equities have been rallying? In oil, it's all about supply.
Right now, energy is going down on its own weight, really. We had a market that had really overshot any sort of real expectations. Anything above about $105 was really in excess. It was that geopolitical scare that came into play, and really now it's just going by the basic supply and demand, which there is more than ample inventories right now.
And it looks like prices are poised to go even lower, especially as geopolitical issues are subsiding, conflict between Russia and Ukraine tapering, and more confidence that Iraq can keep ISIS at bay.
I would have to say in the next 6 to 8 weeks, we could see ourselves certainly below $90, maybe as low as about 88.5.
The drop in oil prices has been good news for consumers and the economy. The Lundberg survey says that gas prices have dropped 9 cents over the last 2 weeks, 34 cents in the past 3 months, bringing the national average for a gallon of regular to $3.37. Now, Deutsche Bank says for every penny drop in gas prices, it's roughly $1 billion. That may be money that's not saved and spent elsewhere. In the metals pits, it's all about the stronger dollar and interest rates.
Everybody is concerned about the rate hikes, and that's kryptonite for gold. I mean, basically, real interest rates are what drives the price in gold.
Also, subdued inflation and a lack of safe haven buying, both keeping gold traders tentative.
The only issue is that maybe down the road, if you do see some inflation and the Fed has to really act, that could get a little bit messy because they're not going to be able to squash the economy the way maybe they did in the 70s with Volcker.
But keep in mind, commodity prices tend to move in cycles. Seasonal factors could serve as a support to oil, and gold could see a bounce if Fed policy changes or if conflicts abroad heat up. For Nightly Business Report, I'm Jackie DeAngelis.
Clorox closed at a record high after announcing it's shutting down his operations in Venezuela. And that's where we begin tonight's market focus. The maker of home cleaning products said its business there is no longer viable because of the restrictions imposed by the country's government. For nearly 3 years, the Venezuelan government required the company to freeze prices, which forced it to sell products at a loss. The stock jumped more than 7% today to $97.23. Shares of Techmira also rallying in today's session. The drug maker got the okay from the Food and Drug Administration and also Canadian regulators for the emergency use of its Ebola treatment in patients who have confirmed or suspected infections from the virus. The stock surged 17% to $23.61. Shares of AutoZone went the other way, though, after the auto parts retailer reported weaker than expected fourth quarter revenue. This comes as the strengthening economy has encouraged consumers to buy new cars instead of fixing up the old ones. That sent shares down 4% to $505.38.
BlackBerry is rolling out a new smartphone, and it is cheaper than the new iPhone. The company's Passport phone goes on sale Wednesday. It will retail for $599 in the U.S. That's without a contract. Now, Apple's new iPhone 6 has a sticker price, no contract, of about $650. Shares of BlackBerry up a little bit today to $10.93. Shares of Radio Shack popped after the struggling retailer said it is in talks with a major vendor in an effort to avoid bankruptcy. Earlier this month, we told you that Radio Shack said it was running out of cash and could be forced to seek bankruptcy protection if it can't find other ways to shore up its finances. Now, after that spurt, the stock finished unchanged at about the price of a connector, 91 cents. Well, after the bell, Ascena Retail posted fourth quarter earnings that missed estimates. The company, which operates Lane Bryant and Dress Barn, also gave an outlook for fiscal 2015 that was below consensus. After hours, the stock fell initially. Look at that chart right there. During the regular session, shares were off about 2% to $16.53.
And Tesco, this is the world's third biggest retailer, is slashing its profit outlook. The British food chain says accounting mistakes in supplier contracts means it has to restate past results, suspend some top executives, and cut its profit forecast for the third time in just the last 2 months. Shares tumbled to an 11-year low on London Stock Exchange today.
Closer to home, hundreds of protesters marched on Wall Street today for a second day of protests against climate change. Today's Flood Wall Street sit-in and demonstration in New York City's financial district was aimed at getting corporate America to rethink its use of fossil fuels and the impact that they have on the climate. The protests may have already had an effect on a family that made millions from oil. The Rockefeller Brothers Fund, run by the heirs of the 19th century oil baron John D. Rockefeller, plans on divesting itself of all fossil fuel-related stocks, citing concerns about climate change.
And coming up on Nightly Business Report, 10 million new iPhones were sold over the weekend, as we told you. But before you use any smartphone, take note. Fake cell towers are popping up and could intercept your calls. We have that story next. The death toll in GM's faulty ignition switch crisis keeps growing. Today, the automaker's compensation fund said that fatality claims rose to 21 and they could go higher. The number of overall claims for deaths and injuries in crashes related to the defective parts rose to 675. That's up from 445 just last week.
Meantime, there is a new recall to tell you about involving some General Motors cars. GM is now recalling 222,000 late-model Cadillac XTS and Chevy Impalas worldwide for a fire risk related to the parking brake. GM says no crashes or injuries have been reported as a result of the problem.
Some staggering numbers to tell you about on just how much airlines are raking in from all those fees they're charging passengers. The Department of Transportation reports that airlines collected more than $700 million in reservation change fees. That's the most on record, along with $900 million in baggage fees. And that's just for the second quarter of this year. Net profits for the airlines that same quarter, $3.5 billion.
Well, most of us think that our private phone calls are just that private, but in the nation's capital lately, there have been reports of clandestine phone interceptors popping up. So who's snooping and why? Eamon Javers looks for answers.
Hackers have known for years that it's possible to build a device that essentially pretends to be a cell phone tower, sucking down all the communications in the nearby area. Now, technology security company ESD America says it can tell when your cell phone is being intercepted. We went on the road with them here in Washington, D.C. to see if we could find those cell phone interceptors in action.
So you think somebody's operating a cell phone interceptor right here on Pennsylvania Avenue?
Yeah, we've got definitive proof that someone's here in this area operating some sort of intercept device, whether that's just tracking people or listening to calls we can't say.
Who's doing it?
Who knows?
No idea.
Yep.
Could it be the U.S. government?
Could be.
ESD's device, called the Cryptophone, helps users tell when they're being intercepted, and the company says it found as many as 15 cell phone interceptors operating in Washington. The locations include some of the most sensitive places in Washington, the Capitol, the Russian Embassy, and even near the White House. ESD says it doesn't know who's operating the interceptors. It could be foreign intelligence, political opposition researchers, or even U.S. national security officials. But they said they suspect corporate espionage.
They're looking for someone who has some sort of information.
Right on this block, there are a lot of big, powerful law firms which are involved in all kinds of extensive corporate disputes, that sort of thing.
Wouldn't it be interesting to know what the background litigation strategy would be for your opponent? And know how to map that, what their filing strategy is going to be. There's also several corporate board proceedings that could be going on in the area.
One thing we should point out here is that this company, ESD America, has a vested interest. They're selling these cryptophones for more than $3,000 each. But the hacking experts that we talked to said that their technical approach, anyway, is the right way to go. One thing we do know is that the FCC is so concerned about this issue of cell phone interceptors that they convened a task force on it back in August. I'm Eamon Javers for Nightly Business Report.
And finally tonight, a new kind of record on Broadway. Disney's long-running musical, The Lion King, based on the 1994 animated film of the same name, has now taken in $6.2 billion at the box office worldwide. That is the biggest global box office take of any film, play, book, album, or other media release, period, in entertainment history. It's good to be the king.
Sure is.
Yep.
$6 billion. That's an amazing number. And that's Nightly Business Report for tonight. I'm Susie Garrow. Thanks so much for joining us.
Hakuna Matata, everybody. I'm Tyler Mathisen. Have a great evening. We'll see you here tomorrow night.
I'm Susie Garrow with the Nightly Business Report News Brief. On a down day in the markets, shares of Apple edged higher after reporting record sales of its new iPhone 6 and 6 Plus smartphones this weekend, more than 10 million units in just 3 days. Stocks moved sharply lower on concerns about slowing economic growth in China. And after existing home sales here in the U.S. fell in August, the first decline in 5 months. On Wall Street, the Dow was down 107 points, snapping a streak of 5 straight winning sessions. The Nasdaq lost 52 points, and the S&P off 16 points, closing below the key 2,000 mark again. And the major airlines collected a record $750 million in reservation change fees, nearly $1 billion in baggage fees in just the second quarter of the year. Be sure to tune in to Nightly Business Report right here on your public television station.